Well, Investec held a conference over the weekend, and here are some of the important takeaways that came out of the conference. They spoke about a whole host of stocks, but we'll take you through 5 of them. KEC International is the first one in focus. Now, it's a rather negative note coming in from Investec for this, because they say that the company won't be able to achieve the earlier guidance of 9% EBITDA margin in FY24 due to a slowdown in the railway business and geopolitical issues. But they're saying they've guided for a 150 to 200 bips margin expansion in FY25 and closer to 10% in FY26. They also expect to cater to 17 to 18% of the market share of the total opportunities in the T&D space globally. Shifting focus from that is Sunteck Realty. Then they're saying that the Mumbai metropolitan region market continues to be the key area of focus. BKC, which is Bandra Kurla Complex, inventory offtake to steadily improve on account of locational advantages and the price point differential that area boasts. Well positioned to double its gross development value from 30,000 crore currently to 60,000 crore over the next 3 years. So rather positive note coming in from Investec for Sunteck Realty. They also spoke about IDFC First Bank. They say that the key message for this bank is that the bank's liabilities franchise is underappreciated by the street, despite it delivering a 40% plus retail deposit CAGR while reducing its cost of fund spread versus large peer banks. They've reiterated the medium-term guidance of 20% CAGR in both assets and liabilities, and they say that FY27 is going to be an important year for IDFC First Bank, as the entire legacy borrowings will be repaid, offering clean profitability. Greenply then confident of achieving double-digit margins in FY26 from the current roughly 8.2%. BIS norms could, however, curb cheap imports, which is around 20% of the total consumption in India, and furniture hardware joint venture with Summit to be commissioned by Q1 of FY25. Indicating a revenue potential of 250 crores in FY27. Lastly, they also spoke about Zensar Tech, and they say that the demand environment continues to be weak, FY25 to be worse or similar to FY24. So that's a slightly negative note coming in for that stock. EBITDA margins to settle around 14 to 16% versus the 17% that was initially guided upon, owing to impact of ramp-up in large deals and reinvestments. Weakness in the high-tech USA biz likely to be bottoming out when we approach Q4. Revenue run rate in high-tech USA could remain stable throughout FY25, and order book remains strong with 75% of the clients signing the SOWs. So, well, that's a roundup of all the important stocks that Investec highlighted during their conference.